Hey everyone, welcome back. I hope there's not too much background noise today. I do have the builders in again. I shall do my best. It is that time of year where many of you are receiving your end of year accounts from your accountant. And you're going to receive three principal things. You're going to get your liasse fiscale, which is your tax submission. You're going to get your compte résultat, which is basically your profit and loss sheet. And you're going to get your bilan, which is like your financial statement. And I know what you do. Your tax submission, you'll go, that's for the tax office, it's not even for me. Compte résultat, this makes some sense. You'll go, yes, I understand this. This is what I spent this year, and this is what I had coming in income this year, so that's nice. And the bilan, you'll go, I don't get this at all. I'll just see if I can see the résultat of the year. Was it positive or negative? Okay, that's what I thought. And now I'll just put this away. So you know your bilan is kind of important, right? This is what your banker will ask for if you want to borrow any money. This is what purchasers or investors will always ask for. So it would be a good thing to understand it. And I promise you in 10 minutes, you will understand it a lot better. Before we get into that, can you see that we just hit 400 subscribers? So that's great news. Thank you all so much. And if you'd like to help push me up towards 500, that would be even better. Okay, let's look at bilans. And a bilan is just a snapshot of your business at a particular moment in time. So if the end of your business year is the 31st of December, then your bilan is the snapshot of what your business looked like on the 31st of December. And although we say the camera doesn't lie, we do also know that some pictures can turn out great and some pictures can turn out really badly, which is why somebody who knows how to analyze a bilan is going to look at the whole picture to get a more composite image of what's going on and not just look at one post, for example, what you have in the bank. Okay, so your bilan is divided into two halves. You have, first of all, the active and second of all, the passive. And as it says here, the active is what your business owns and the passive is what your business owes. So you will not find in the active, for example, if you rent something, if you rent a premises or you rent a car, that does not belong to your business. So you won't find that thing in your active, in your bilan. And in your passive, even if you think that you never leave anything outstanding, you're always completely up to date with your invoices and you pay everything straight away, you definitely do still owe something to somebody, as we're about to see. So let's move on. The first thing you'll find in that active right at the top is the immobilisation. So this can take the form of, for example, patents or part shares that you have in other businesses. But for most of you, you'll mostly see things like tools, machinery, maybe vehicles, potentially buildings or computers. These are things that tend to cost a fair bit of money and that you hang on to for some time. You don't change them very often and they depreciate over a number of years. And you'll find that this is divided into two sections: the amount that you still have outstanding on it and the amount that you have already paid off it. So moving on down, we'll find stock and unpaid client invoices. Stock can take mainly three different forms. So it may be, for example, that you buy finished products that you sell on at a profit. Imagine you buy stuff wholesale and you sell it on retail. It can be that kind of stock. It may be that you have raw material stock that you then transform into a product. So this would be, for example, restaurants. Or it could be that you have to hold a certain amount of stock for a service-based industry, fair bit of banking. So for example, an electrician is always going to have a certain amount of stock in cable, light switches, plug sockets, etc., etc. And again, stock is divided into the amount that you paid for it and the amount that it's worth now. So if you bought a whole load of iPhone 7s just before Apple brought out the iPhone 8, then the amount that your stock is probably worth significantly less now. So that again will be divided into two separate figures. And similarly with unpaid client invoices. So this is money that you do have because you know it's coming to you, but you just haven't got it yet. But it turns out that the longer an invoice goes unpaid for, the more difficult it is to recover. So if you have outstanding client invoices that have been outstanding for a year or 2 years, then we have to face the probability that you probably won't get that back or definitely won't get all of it back. And we have to start writing off that amount of money. And then right at the bottom, what we'll have is the treasury. And so when your clients do actually pay you, that money goes into the treasury. How long it stays there is another question, but your treasury can be made up of, if you actually have a till, a cash register, then it can go in there. Or if you get paid mostly by bank transfer, credit card, whatever, it's going to go into your bank account. It could be that you have excess treasury. It's to be hoped that you have some excess treasury and that you've managed to put some money aside to pay for your social charges or your VAT or your corporation tax or whatever it is that you are going to have to pay out. It would be nice to know that you've already put that money aside. That's going to show up in treasury. And if you have even extra money that you've managed to invest, that would be lovely too. Imagine that you have extra cash that you don't need right now, and so you have put that into Apple or Google or Bitcoin or whatever it is that you want to invest in. That's also going to show up in treasury. So those are all the things that we're going to find down the active side of the bilan. And then if we look at passive, then at the top, the first thing we're going to find is your capital social. So if you have a limited company, you will have capital social because you need to put in some capital at the beginning. When you set up your company, now you can start a company with as little as €1. So it may be that you only find that, but it's more common to put in more than that. If you put in 500 or 1,000 or 5,000 or 10,000, that's the amount that you're going to find in capital social. Réserve. Okay, this can turn up as réserve, or it could be capital propre, or it could be fonds propre. It can take a few different names, but effectively what it means is profits of a previous year that you have not drawn, either because you don't need that money right now and you've decided that you would rather not have to pay social charges and income tax on it, so you've left it in the company, or it could be that you have a future project for your business and you need to invest in that, so you've left the money there for future investment purposes. But either way, profits from previous years will show up right here at the top of your bilan. Next up in the middle, we're going to have loans. So usually loans are towards the bank, but they could also be towards you. Imagine that at the beginning of your business's life, you have fully financed it yourself with your own personal money. Well, instead of sticking all of that money in capital social where it has to stay and you can't take it back out again, you can instead put a certain amount in capital social, put the rest of it in what's effectively a director's loan. And what that means is that when the business has the money, you can reimburse yourself. And unpaid supplier invoices, or is that exactly the opposite of unpaid client invoices? So these are things that you have bought and that you haven't paid for yet. So that always helps out your cash flow a bit, because if you don't pay your suppliers until towards the end of 30 days or 60 days, however long it is, then that's going to give you a little bit more moving cash in the meantime. And if you don't have enough moving cash, then what you end up with is an overdraft, which is of course exactly the same thing as a negative treasury when you don't have any money in the bank. Okay, so those are the principal posts of the bilan. And what it would be good to recognize is that looking down this left-hand side, we are going from a state of the most illiquid down to the most liquid. So right at the top we have the it says it in the word, right? Immobile. So these are things that are not easily transformable into cash. Whereas right at the bottom here, that is literally cash. If it's not cash in your hand, you can go to the bank and draw it out as cash. So this is very liquid. And in the middle here, this is what we call the actif circulant, which is to say that it's out, but it's coming in again soon. So if you imagine at the top here, you've got an ice cube. So your money is frozen. You can't get to it very easily. And then here it's starting to melt down, and here it's a puddle of water. Now if we look down the passive, then what you'll see is we go from the longest term down to the shortest term, because right at the top, the capital social has to stay in your business for the duration of your business's life. And at the moment when you sell the business or you close the business down, that money will come back to you, providing that your business has no other debts. Moving down, réserve, well, profits from previous years. Loans, yes, they're going to go on for a while. The idea is that you pay them off as you go along. Unpaid supplier invoices, this is a relatively short-term thing. You have a number of days before you have to pay them. And then the shortest term is your overdraft. You definitely don't want to stay in overdraft for very long because it costs money. So long term down to short term, most illiquid down to most liquid. Now, what somebody who is looking at your bilan, analyzing your bilan wants to see is that your business has enough resources, which are found up here, to finance its long-term health, which is here. So we need to know that the IMO is going to be functioning and in good health because you need it to be able to do your job. We need to know that you have enough stock to be able to generate more invoices, because if you don't have these two, then you can't be producing these. What we don't want to see is that you have taken out a loan, for example, to pay your tax bill, because what that proves is that there's some mismanagement here in the cash flow. If you need to take out a loan to pay your tax bill, then either your clients are not paying you quickly enough, or you're maybe buying too much stuff that you don't actually need at the moment. But there could be any number of reasons, but there's a problem. And so if you're in negative at the bank, then we need to be looking at what's happening in all of this midterm stuff here, because this is what defines and this is what produces either a positive cash flow or a negative cash flow. So when you get your bilan back this year, then you'll have an idea of what's going on and you can look at it and say, yes, that makes sense to me. If this has been helpful, don't forget to subscribe and I'll see you again soon.